Hey folks, my guest today is Lily Liu. She has pioneered using tech to modernize real estate and government. After a tenure in Mayor Bloomberg's office and founding GovTech startup Public Stuff, she's now revolutionizing rent with PropTech company Pinata. That's pinata.ai. Lily, you ready to take us to the top?
I am. Thanks for
Okay.
having me.
So why does rent need to be revolutionized based off what you learned at the mayor's office?
Rent is a pretty antiquated industry. Renters don't get anything back for their on time and in full rent payments. Unfortunately, with each on time rent payment, you're not building credit, you're not building points, you're not getting anything back for that good renter behavior. And so we're really flipping the model and saying, hey, renters should be building credit. That should be reflected on their credit reports, and they should be getting more back when it comes to everyday savings, cash back, points, etc.
I think you have to convince property managers to be your distribution channel here. Why would property managers want their renters to use Pinata?
For property management companies, it's very much both a transaction every single month, but it's also a service. They're in the industry of essentially hospitality, right? Providing a great living experience for their renters and building that relationship. So come time to renew your lease, you actually have a good reason to point to. Not only have you taken care of maintenance issues, which we think of as kind of baseline, but now you're providing rewards. You're providing a reason for them to renew so they can activate additional points. We call them Pinata Cash, and you can get more back when it comes to cash back, perks, rewards, and other things that renters can redeem on in the marketplace. We also have something called custom incentives for property management companies, because there's a whole slew of other things that these groups want their renters to do. Things like maintaining your unit, referring other friends, reviewing folks on social media, renewing your lease, even things like activating your smart home devices. Groups are making investments into these smart tech gadgets in the home, but it's not very good if the renters aren't activating the accounts and actually triggering it so that the data feed goes back to the property management companies.
So is this how you make money? You're charging the property managers here?
So we actually have a multi-sided marketplace. We make money from property management companies that pay us a recurring subscription fee monthly. We also make money from a small amount of money from brands participating on the platform. So these are brands that are providing our renters usually something for free or at a rate that you can't see elsewhere online. And what they're doing is not only giving that to our renters, but we also generate some percentage of that revenue as well.
And so I see Starbucks, Amazon, Target, TaskRabbit in your UI and on your website. These are examples of brands on the platform.
That's right. Those are some of our popular brands. And it comes in all forms and sizes. We have gift cards, we have cash back, we have actual gifts and merchandise. And so, many of these are limited edition. So we'll expose, 10, 20, 50 units of a particular device that you can get if you come into the app in time. And then we have everyday savings. So this is at gas stations, grocery stores that you can actually get discounts.
Okay. But I guess so two revenue streams: property managers pay SaaS, brands participate in the platform. You said the brands, that was a small portion of your revenue. Are we talking like under 10%?
It really depends on the brand, but yeah, that's right. Usually under 10%.
Okay. But of your total revenue, under 10%, you'd say comes from brands?
A little more than 10%.
A little more.
Closer
okay.
to about 20. Yeah.
So is that growing? Is your intent to grow that, or are you phasing that out?
No, our intent is to grow that. We actually, we're projecting that in future years, that revenue stream actually increases as we have more renters, as we have more users on the platform, making more transactions. We're going to generate more revenue and hopefully even bigger brands that are giving us a better CPA.
I see. Okay. So then the other 80% comes from the property managers.
That's right.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your Founder Path dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of Founder Path, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. I love this. Okay, very interesting. So I guess give me a little bit, if there's property managers listening today, right? And they're going, man, I'd love to use this. Or maybe there's a lot of investors on our show that run maybe 12, 24 unit apartment complexes, right? And they're thinking potentially they'd love to use this. What might they pay?
Great question. So it starts at $1 per unit per month. Now that price will vary based on the actual product offering that they want to expose to their renters and the unit size. So if you're a mom and pop like myself and you have under 20 units, you're not going to get a much better rate than that, although we think it's pretty good based on the value that your renters are getting. If you're a very large group with tens of thousands of units, the price will look different.
I see. So a group with 30,000 units on your platform, they could get under $1 per unit. You
Correct.
Discount. I see.
Yeah.
I see. But the most expensive is $1 per unit per month.
That's right, and that's many of our groups that fall under around 2,000 units are at that price.
I see. Okay, very cool. Give me the backstory here. You have an interesting history. When did you launch the business?
We actually launched it right as COVID picked up in early 2020. And, one of the things that I've always been a renter on and off throughout my adult life. And so now that's almost 2 decades. I'm dating myself. And, the first time I went to apply for a home loan, I realized that I only had one credit card and I had not been building credit. I didn't realize the weight that would carry under a home loan application. And I also realized that nearly a decade of my on-time rent payments were not reflected. And so I remember trying to pull information to show that, hey, look, I pay my bills, right? And this is my biggest bill every month. It didn't account for anything. And so really it was born out of the inspiration of really trying to allow folks that are early in building their credit to have that avenue to build credit, but also folks that what we call credit invisible, where they may not even be scored yet. And as a credit repair facility, it's a little bit harder, but really that's one of the big reasons why we started Pinata. It was that, and then also building the ability to get something back, right? That brands have things that are valuable for renters in their move in, live in, and move out experiences. So how can we support them on that journey for everyday discounts, rewards, perks? And during COVID, it really helped us to narrow in even tighter on our value prop to renters and property management companies. We had a bunch of other ideas. I remember during that time, and COVID just made us cut that slack and just really focus on what was important.
Who's we? How many co-founders?
So we have our CTO, we have our chief product officer, our president, and chief creative officer.
These are
So
all
there's a
founders.
core four of us.
Wow.
Oh no, that's our executive team. Co-founders,
Oh,
we have one other co-founder who's our president, chief creative officer, and one who is our board member.
okay. So there's three of you total.
Three.
Three total. Okay, got it. And it's always fascinating to me how folks structure going into a brand new idea, right? So it sounds like you've got a genius creative. You've got maybe someone who's been there, done that on your board, and then that you've got you. Do you split equity sort of evenly amongst the three of you, or do you sort of negotiate that?
It's certainly a negotiation, and I think a lot of it really depends on what we're bringing to the table. I've seen, I've been at other early stage companies as a founder as well, or co-founder rather, and it really just depends on the dynamic. How long have you been ideating on the idea? Did you try something else beforehand? Who's bringing what to the table? Is there capital at play? That's obviously an important factor as well.
Mhm. And are you the engineering part of the co-founding team? Do you get the MVP off the ground?
I wish. No, I am the business sales acumen, and obviously everything else that a CEO has to do. So call it kind of the grunt work early on. So I get the
How did you
coffee.
get that? This is a tech platform. There's a beautiful mobile app I see on your website. How did you get that technical? Like, I mean, usually that tech person is in the co-founding team. It sounds like you didn't have that. So I'd love to learn sort of how you structure. You just pay them a lot of money at the beginning, or her?
Great question. We actually found a development partner. And so we basically iterated on that MVP initially with a development partner that,
Is that a dev shop? When you say dev partner, that's what you mean?
yeah, that's right.
Yeah. Okay.
That's right.
Yeah. Where'd you find them? Can you share who you used and were they good?
Um, it was actually a group that the individual we worked with had worked with this company many times in the past. So I think 3 or 4 times with other companies. And so they were pretty well vetted at that point.
Yeah.
We had spoken to a bunch of groups, but it's a process. And I think if you can get that referral from actual experience and you can point to different products, and for us, it was mobile and web apps that were important for us to look at.
So let's obviously that's nice because there's so many dev shops, you never know who's good, who's not. So that history is important. Let's fast forward though to today, right? So you're growing the business. How did you well, tell me the story of how you got your first property manager on the platform and then how many property managers are on the platform now today?
Great question. In the beginning, we did not charge anything. And that's actually, of course, you take away that friction, it's much easier to sell. But even then, you'd be amazed how difficult it is to get a professional group to actually take an MVP product, use it in-house. And we're not talking about something they use internally. There's no exposure for them. It was about having them market this to their renters. So they were actually taking on significant work to get our product launched within their portfolio. And it was still a pitch. We still had to go through many processes of selling them, pitching them, showing them the product. And I remember the first account that we landed, and it was actually a fairly sizable one.
How many
and
units?
It was about a little less than 5,000 units,
Okay.
and they were going to phase in their portfolio. But again, for us, it was a pretty
Huge.
good group, considering we hadn't actually had the product in market. And so I remember that. But again, even if it's free, it's still a difficult sales process when you're doing a B2B sale.
So how many, Lily, today? How many property managers total, unique property managers? So that would be one, the 5,000 unit you just told me.
Yeah, so we have over 600 property management companies on the platform today. Many of them are small to medium-sized groups. In the market right now, about 2/3 of rental units are owned by small to medium shops, not the large institutional groups we often think about, the Greystar, the Avalon Bays. And they actually don't represent the majority of rental units in the US right now.
Yep,
so our big focus was on the small to medium-sized guys first. We're actually moving upstream right now to also open up the platform to larger groups.
And what does that mean? Obviously, 600 property managers, my audience isn't in real estate, so they might not know. What does that mean and convert to in terms of number of units on the platform across the 600 managers?
I think we're hovering around 270-ish 270,000 renters. And these are renters that have been entered into our platform. So that does not account for the full portfolio size of some of our groups,
You can
knowing that
expand
our
still.
groups, again, will go in pilots. That's right.
Yeah, so 270,000 active today. Now, Lily, can I do the math there? A dollar per unit per month times 270. You're doing about 270 grand a month in revenue.
Can't speak to the specific revenue, but that's how you would calculate it. That's right.
Oh, I was going to say, I'm not making any numbers up. I'm just multiplying your
That's
numbers.
right.
So
That's right.
that math should work. Okay. So, and if you're around that today, just so we can understand growth, do you remember where you were at about a year ago?
So about a year ago, if we rewind early 2021, we actually were not generating any revenue. And so we were just coming off of that pilot phase where we weren't charging property management companies anything to use our platform. We were really running the MVP tests.
So Lily, I mean, this would be you've gone from nothing to a $270,000 a month in under 12 months. That would be incredible growth.
Yeah, our revenue is actually not quite at that level, but the calculations roughly accurate.
and that's because once people are more than 2,000 units, you give group discounts and you have some larger folks under. Okay, can you break $200,000 a month this year? You think by December?
It's hard to say. I think our intent is to be pretty aggressive on the revenue front.
Mm-hmm. Well, I mean, everyone would say that, right? Everyone wants more revenue. I'm curious how ambitious you are, right? Do you think you can break it, or how many more property managers would you have to add to break it? Would you say?
For us, it's unit count.
Yeah.
So that's the important thing. But again, as we get more units, as we get more renters in, it's just more revenue for us.
Yep. How have you I mean, if you're pre-revenue exactly a year ago, that means you had about 12 to 18 months of building with no money coming in. How did you fund the business?
We had about 1 year of building and then MVP. And so it ended up actually being just about 7 to 8 months building out the product. We actually did an even earlier pilot during that 8 months. And then the end of 2020, we actually spent on pulling in those property management companies that were using and piloting the program. And then early 2021 is when we started shifting our sales process to have a paid
Lily, sorry,
monthly service subscription.
We're short on time here. I'm just curious, how did you fund it though, the first 12 months? There's no revenue coming in.
Oh, we were seed funded. So we received seed funding. Yep, that's right.
Okay.
We raised seed.
How much did you raise? And it was at 2020?
That was 2020. I think we raised a few million in our seed. So it was a pretty good size seed.
You're starting like 3 million, something like that?
Yeah, that's right.
Okay. And why are you still using that capital today, or did you decide to raise more capital?
We've raised our Series A since then. Yeah.
Okay. And are you comfortable sharing how much that was?
So that was a $13 million round.
Okay. And that was this year?
That was earlier this year. That's right.
Very cool. Okay. So why do you need, that's a lot of capital. Where's most of that going to be invested?
So a lot of that is about growing our team, of course. The first investment for us is human capital. After that, we're looking at making a big investment on the product and rewards offers. So renters are getting even better things now on the platform. And finally, the third tier is really focusing on sales and growth. And so you're going to see a lot of new campaigns coming out to not only grow the number of renters on the platform, but also the number of property management companies.
And Lily, most folks Series A this year, they're selling whatever 10 to 15, 10 to 20 sometimes % of the business. Were you sort of in that same range?
That's right. Yep, that's right.
So it felt pretty fair to you. You didn't feel like you had to go with a low valuation, or you didn't feel like on the opposite that you got a really high valuation. You were sort of right in the market.
No, we think it was fair, and our investors are great. Yeah.
That's awesome. Okay, cool. So again, if you sold 10%, that'd be somewhere around 100 million, 100-ish valuation, maybe a little less than that. But regardless, you're growing quickly, which is great. Tell me about the team today real quick as we wrap up. How many folks full time?
So we have just around 20 folks on the team right now. A great executive team that have been with us since the beginning, since the inception. And again, looking to grow our team largely on product and tech, and then sales and marketing after.
How many engineers today?
Right now we have about 8 engineers on our team.
Very cool, Lily. All right, guys, let's wrap up here quickly with the famous 5. Number 1, Lily, favorite book that you've read?
Ooh, favorite Favorite book? I'd have to say, I don't have time to read books recently. And so I'm going to unfortunately have to skip that. But I have a lot of podcasts that I can speak to.
That's good. No worries. Number two, is there a CEO you're following or studying?
I try to read up on a bunch of great CEOs. Obviously, I think it's hard not to follow Elon Musk. He's doing some pretty incredible things. I'm a big fan of, how visionary he can be, but I think there's also a lot of lessons to be learned and what not to do. And so I think there's, he's a great example in both.
Number three, what's your favorite online tool for building Pinata?
Favorite online tool for building Pinata? Oh gosh, that's a hard one. I think for us, because we are a remote team, it's hard to really stay plugged in on a regular basis. So for us, it's been a project management tool that we've been using across the team called ClickUp. Good for process documentation, also building out the product with engineers.
Zeb was on the show a couple of weeks ago, breaking 80 million bucks in ARR, scaling very fast, 4 billion valuation. Incredible story there. So good stuff. Number four, Lily, how many hours of sleep are you getting every night?
Oh, well, you know what? I have a newborn, so not many hours.
All right. So
maybe
married,
on and off 5.
Married and what, one kid, two kids?
One. Yeah.
One kid. First one. Congratulations.
Thank
Lily,
you.
do you mind me asking how old you are?
Yes. No.
You can lie.
I'm 39. No.
All right. Fair enough. Fair enough. Last question. Something you wish you knew when you were 20.
That something I wish I knew when I was 20. Nothing is as it seems, it's always different.
Guys, Pinata.ai, helping property managers incentivize renters to do what they're hoping that they will do: install devices, smart devices, pay rent on time, earn credit, get kickbacks from Target, etc. They're scaling nicely. Over 600 property managers use their tool today across 270,000 units. They generally charge $1 per unit, but obviously there's some group discounts in there. They've grown nicely. No revenue a year ago, somewhere around called 100 to 200,000 bucks a month today in revenue as they look to continue to scale. They've got a 13 million Series A under their belt. 820 on the team, 8 engineers now building up the sales and marketing function. We'll see what happens next. Lily, thanks for taking us to the top.
Awesome. Thanks, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.